$14 billion. 7 years of permits and red tape. That's the real price tag on the energy source most people believe will power the AI boom. But sitting quietly underneath all of it is a different energy source. One that costs a fraction of that, comes online in a fraction of the time, and already has Google, Nvidia, and Berkshire Hathaway signing billion-dollar contracts for it. Almost nobody outside of Wall Street is talking about it yet. Welcome back to Wealth Signal. Today we're breaking down an energy shift most investors have never even heard of, and 3 stocks tied directly to it, ranging from a brand new, high-risk IPO to an established value play. Every major tech revolution has really been an energy revolution underneath it. Railroads ran on coal. Cars and the modern economy ran on oil. Now the AI build-out is running into the same wall. Raw power. Nvidia's own CEO has described the AI industry as a stack of layers: chips, data centers, models, applications. But underneath all of it sits one foundational layer: energy. Whoever solves that layer first has a real structural advantage. That's also why this has become a geopolitical story, not just a business one. China has been described as having a real edge in this race, not because of chips, but because of raw energy capacity. Recent U.S. policy moves aimed at Venezuela and Iran have also functioned as a way to cut off cheap oil access for China, adding another layer to this competition over who controls the energy foundation of the next decade. On the U.S. side, the current energy secretary previously ran Liberty Energy, a company that was an early backer and investor in geothermal energy specifically. That background matters because it signals a policy tailwind toward developing domestic geothermal capacity, rather than leaning only on lithium, batteries, and supply chains where China already has a multi-year head start. Start with nuclear, because that's where most of the hype and the capital has gone so far. A single nuclear plant costs roughly $14 billion to build, and takes around 7 years to get through approvals and permitting. Once it's running, the energy it produces costs around $8,000 per kilowatt of capacity. It works, but it's slow and it's expensive. Now compare that to geothermal. Getting an initial phase of a geothermal plant up and producing power can cost somewhere between $200 and $500 million, a fraction of nuclear's price tag. And the cost per kilowatt of capacity runs around $4,000 to $5,000, roughly half to 60% cheaper than nuclear. It's also faster to bring online. Hyperscalers tend to move toward whatever solution has the least friction, the same way water finds the fastest path downhill. Nuclear keeps running into permitting delays and public hesitation about handing reactors over to tech companies. Geothermal doesn't carry that same baggage, and it's already producing power today. That's a big part of why Google, Nvidia, and Berkshire Hathaway have been signing multi-billion-dollar partnerships in this space. It's worth noting that geothermal technology itself isn't new. Versions of it have existed for decades, and some analysts argue that legacy energy players simply had little incentive to develop it at scale while oil and gas dominated the picture. That's an interpretation, not a confirmed fact, but it helps explain why a technology this straightforward has taken this long to get real institutional attention. The first stock is Fervo Energy, ticker FRVO. This is a genuinely high-risk, early-stage name, so treat it that way. Fervo went public through an IPO earlier in 2026, and it's still a development-stage company, meaning it hasn't yet built up a track record of steady reported revenue the way an established company has. What makes Fervo notable is the size and quality of the contracts already locked in. It has hyperscaler partners, including Google, tied to its energy output, with its first plant already operating and a second plant in development. Those are real signed commercial agreements, not just plans on paper, which is unusual for a company this early in its public life. Since its IPO, the stock has pulled back from its early highs, which is common for newly public companies once early lockup restrictions on insider shares start to expire and more shares hit the market. That kind of post-IPO volatility is a normal mechanical part of how new listings trade, not necessarily a signal about the underlying business. Fervo's plants are expected to ramp up production through 2026 and into 2027, which is when the company's actual reported revenue should start showing up more clearly in its earnings. Some analysts expect the year-over-year growth percentages to look unusually large once that happens, simply because they'll be measured against a very small starting base. That's a math quirk of early-stage companies, not a promise of any specific return. This remains a high-risk, speculative name until it builds an actual earnings track record. The second stock, Ormat Technologies, ticker ORA, is a very different kind of company. Ormat has been operating in geothermal for years already, with a market capitalization of roughly $6 billion and profit margins of around 10%. Modest, but real and established, unlike a pre-revenue name. The stock has sold off recently, moving from around $150 down to around $120. At the same time, the underlying business has been growing its top-line revenue by roughly 50% and its bottom-line profit by roughly 30%, with larger hyperscaler contracts flowing in as well. Ormat is useful as a reference point for the whole geothermal story. It's essentially a working, profitable preview of what a company like Fervo could look like in a few years, once its plants are fully operating and its contracts are converted into steady reported revenue. Quick note: we save a visual breakdown of every stock we cover, numbers included, in one place on our Telegram channel. If you want an easy way to reference today's 3 names later, without digging back through this video, the link's in the description. The third stock is Baker Hughes, ticker BKR, and this one isn't a geothermal company at all. It's an equipment and services provider, selling the drilling technology and infrastructure that companies across the energy sector, including geothermal developers, actually need to get projects built. It's a classic picks and shovels position on the broader energy build-out. Baker Hughes pulled back from a peak it hit back in May, around the same time capital rotated hard into the chip sector, which had become a crowded, fast-moving trade. That kind of sector rotation is common. Money chases whatever trend is hottest at the moment, then moves on once that trade gets overcrowded. On a valuation basis, Baker Hughes looks reasonably priced relative to the size of the broader opportunity in front of it, especially compared to newer, more speculative names like Fervo. It's a longer-established, cash-generating business, benefiting from rising energy infrastructure spending broadly, not just from geothermal specifically. So, what's the actual timeline here? Analysts following this space have pointed to a window of roughly 12 to 18 months for the market's perception of geothermal to start shifting, as more of these contracts begin flowing through actual reported earnings rather than sitting as future promises. There's a pattern worth recognizing here. Companies like ARM and Palantir were, at different points, priced by the market well below what their underlying businesses were doing, until enough investors started paying closer attention and re-rated them. That's not a guarantee this plays out the same way for geothermal names, but it is a recognizable pattern in how markets price early, misunderstood technology shifts. It's also worth remembering that fast-moving capital tends to rotate from trend to trend. Gold, then chips, then whatever comes next. And at one point, the chip sector alone reached roughly 20% of the S&P 500's total value, which some view as a caution signal in itself. Geothermal, by contrast, still isn't getting mainstream attention. None of this means geothermal will be the only winner in the AI energy story. Other companies across the broader energy space are also benefiting from the sheer scale of power demand right now. This is a story with room for more than one winner. To recap, Fervo Energy is the high-risk, early-stage bet with strong contracts but no earnings track record yet. Ormat Technologies is the established, profitable proof of concept. And Baker Hughes is the value play, supplying the equipment behind the whole build-out. 3 very different ways to get exposure to the same underlying shift. And remember, that visual breakdown of today's 3 stocks is saved for you on Telegram. Links below if you need it later.